Oh, there's so many yummy vegetarian options out there. You could try like lentil soup, veggie burgers, tofu stir fry. The possibilities are endless. 50,000. That's it. That's all the jobs America managed to add last month. I mean, this is the weakest jobs report we've seen in years. Look, economists, they were expecting a pretty solid 150,000 jobs. We got a third of that. This wasn't just a miss, it was a complete bombshell. So the big question on everyone's mind is this it? Is this the recession signal we've all been watching for? All right, stick with me here, because by the end of this little explainer, you are going to know exactly what this jobs report means for your investments, your job security, and yeah, your 401k, and why this could be a really big deal if you're not paying attention. Okay, first things first. Let's connect this big, scary headline number to what actually matters, the real world, your world. You know, for millennials, the financial pressure is it's just immense. We're talking an average student loan debt of $33,000. Think about that. That's a number that just hangs over you, right? It delays everything, buying a home, starting a family, even just taking the kind of financial risks you need to take to build wealth. And what are we making to try and pay that off? Well, the median entry-level salary is kind of stuck right around 50 grand. I mean, do the math. It's already super tight before you even think about rent, a mortgage, or, having a life. So let's talk about the real income squeeze, because this is key. You might see headlines bragging about 3.9% wage growth, and that sounds okay, right? But here's the kicker. Inflation is projected at 3.1%. So your actual spending power, it's barely budging. It's exactly like running on a treadmill. You're putting in the effort, but you're not actually going anywhere. And for so many of us, this is just reality. Housing eats up over 30% of your income. Easy. Then pile on student loans, other debt, and what's left over is razor thin. So when you hear about a cooling job market, what that really means is fewer opportunities and slower pay raises, which just puts incredible pressure on a budget that's already stretched to its limit. So what's the bigger picture here? Well, it really all comes down to the Fed, the Federal Reserve, and the incredibly tough spot they're in right now. Okay, here's where it gets really interesting. That 50,000 number, it's bad, sure, but the real story, the one you need to pay attention to, is in the revisions. See, the job numbers for both October and November, they were just revised, downward. That means the economy has actually been weaker than we thought for the last few months. These revisions, they're like flashing red lights on the dashboard. And listen, this isn't just a US problem. The entire global economy is hitting the brakes. We're looking at global growth projected at just 2.7%. The US forecasted to be even lower, around 2% by 2026. To put that in perspective, before the pandemic, we were cruising along at 2.8%. A slowdown like this can put a serious chill on your investment portfolio, because when things get uncertain, big money gets scared. And this is what puts the Fed in a totally impossible spot. I mean, think about it. If they cut interest rates to try and jumpstart the economy, they risk inflation just roaring back to life. But if they keep rates high to keep fighting inflation, they could accidentally shove us into a full-blown recession. It's like trying to land a jumbo jet in the middle of a hurricane. And this 50,000 jobs report, it's a massive gust of wind hitting them from the side that nobody saw coming. But wait, just when you think the playbook is simple, the economy's slowing, so the Fed will eventually have to cut rates, a massive curveball gets thrown into the mix. Seriously, this is the part most people are missing, and it complicates the whole shebang. Get this. While the Fed is trying to tap the brakes and cool things down, there's a proposal for $1.5 trillion in new military spending. That's trillion with a T. In fact, some defense stocks actually popped on this news, pretty much ignoring the terrible jobs report entirely. So that leaves us, as investors, with this huge question mark. Could a massive fire hose of government money like that actually counteract the job slump and prop up the economy? Or is it just going to pile on to the national debt and pour gasoline on the inflation fire the Fed is trying so hard to put out? It's a total wild card. Okay, so we've laid out the problems, the risks, the uncertainty. Enough of that. Let's pivot to what you can actually do about it. It's time to build your financial defense plan. I'm going to walk you through 4 simple, actionable steps. Number 1, build up that cash cushion, your emergency fund. Number 2, it's time to review your 401k. 3, attack that high-interest debt like it's your mortal enemy. And 4, start scanning for a side hustle. Let's put some real numbers to this, okay? For that cash cushion, you should be aiming for at least 6 months of your living expenses and put it in a high-yield savings account so it's at least doing something. Now, your 401k. If you're all in on aggressive growth stocks, maybe it's time to think about rebalancing. That could just mean shifting 10 to 20% into something safer, like bonds, to dial down the risk a little. For debt, it's simple. Go after the credit card with the highest interest rate first. Paying that off is a guaranteed return on your money. And for the side hustle, look, even an extra $500 a month from some gig work can be a total game changer. So look, here's the bottom line. This 50K job report is a big red flag that the economy is softening. But taking proactive steps right now can shield you while all this uncertainty plays out. This isn't about panicking, it's about being prepared. And that leaves us with one final, really critical question you need to ask yourself. With the economy at this crossroads, is your portfolio built for defense, or is it still set up for a bull run that might already be in the rearview mirror? And just a quick reminder, everyone, this content is for educational purposes only. And as always, past performance is no guarantee of future results.